There are three major crises over the last 25 years. The dot-com, the '08, and the recent 9% inflation crisis. Before each crisis get into its full swing like this, I've observed there was a surge and go like this, and like this. In this tutorial, I will share why a surge and go before each crisis. What are the key variables that we should be looking out for this year? And I hope I don't sound too ambitious in trying to time this move with this surge in the gold prices. I'm Kon Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. Before we get into today's subject, please do take some time to read the disclaimer. This time, this move is very similar yet very different from the past. Similar in the sense of strong demand for gold, different in the sense that over the last 3 years, since 2022, it is the central banks that have been stockpiling the gold. And let's take a look at this chart here. And this is by the World Gold Council. And we could see that they narrowed down to just central bank purchase alone. And we could see very clearly in the year 22 all the way to 24, the accumulation of gold is much higher than those previous years. And why are the central banks stockpiling the gold? The key function of gold is it acts as an asset for inflation hedge and currencies hedge, meaning that central banks that bought the gold are expecting inflation to continue and seeing some troubling with some currencies. As currencies lose their value, inflation picks up. And let's go back to this chart again. And let's see that what happened to the gold. And this gold may seem small, or this surge may seem small, but from 250 to around 350, that is a surge of a 50% move. And there we saw how the market came off. And down here is the same. From here, it is about 500 to about 1,000. That's another close to a 50% surge in price. And from there, we also saw how the '08 crisis have unfold. And this was a small move we had just experienced not too long ago, the 2022 inflation crisis. This move was down by about 37% for NASDAQ. And what are the key variables that we should be looking out for this year? And I believe that inflation is still a key. And with the tariffs, that it doesn't help. There's a tick for tech that's into action right now that we all may have read. And what Jerome Powell trying to target is that the 9% inflation, he hopes that it can come down to about 2 or below and stay around there, just like what the previous years, something like this. Below 2 and stay below 2. But what we saw that the lowest point was at 2.4 and it seems to be picking up to 3. And I'm not too sure it's going to hit higher. But again, with tariffs, war that's going on, it don't seem to help. And the other variables that we're seeing here is the borrowing cost through the yield curve. And not too long ago, before 2022, the 10 years loan tenure, it was at about 1.5%. But today, despite of inflation coming down from 9 to current, the borrowing cost is still pretty much elevated at 4.5%. And not many people talk about it is the bonds. I'm quite concerned right now that has broke below this uptrend line since 2022. And I just saw the videos from Ray Dallas that he was concerned about the bonds. It's not just the T bonds, but the UK bonds are down. The EU bonds are down as well. And I believe that this year, the talk about topic, it will be bonds. Maybe not now, but it may come. So these are the three variables that are taking shape. And the surge in gold price, like this we're seeing here. And this is what I'm going to do. How to time this move, like what we saw with inflation crisis. And this was a period where during this period before 2022, inflation was already piping hot. And then Jerome Powell has mentioned that the inflation was transitory because of the post-COVID, that shoppers out in the street again, it caused inflation. So it was short term, but it persisted to June 2022, the 9%, and he knew that something is wrong. And how did I time the market back then was I look at this simple uptrend line that I've drawn with all the significant trough. The moment it breaks below, my strategy for the US market have changed. Before that was buy on dips, but from this point onwards with a high inflation still, my strategy have changed to sell into strength for the whole year of 2022. Now, what we're seeing here is that it reacts very nicely again to this uptrend line with all these significant trough. I'm continuing to believe that the whole market is still buying into dips because technically it's still showing me strength. But fundamentally, where we've discussed earlier, giving us some clue that we have to be cautious in the goal and all these three key variables. But I'm still going to continue to buy into dips unless this nice trend line has broken below, and I will know what to do next, which is I will change my strategy to sell into strength. I hope you find what I've shared helpful. Do drop me a note if you notice what we discussed are unfolding, just in case I've overlooked something. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.